This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices retreated on Wednesday as traders eyed a potential jump in U.S. crude inventories, though prices held near two-week highs amid relief after the United States and China agreed to temporarily lower their reciprocal tariffs. Brent crude futures fell 32 cents, or 0.5%, to $66.31 a barrel by 0700 GMT. U.S. West Texas Intermediate crude slipped 32 cents, or 0.5%, to $63.35. Both benchmarks had climbed more than 2.5% in the previous session. The two largest economies agreed on Monday to pause their trade war for at least 90 days, with the United States cutting tariffs to 30% from 145% and China slashing duties on U.S. imports to 10% from 125%.
Goldman Sachs sees upside risk to its Brent and WTI oil price forecast in 2025 and 2026 from recent trade de-escalation, it said in a note on Tuesday. The bank estimates around $3-4 per barrel of upside risk to its Brent and WTI oil price forecast of $60 per barrel and $56 per barrel respectively for the rest of 2025, and $56 per barrel and $52 per barrel respectively in 2026. Goldman said that reduced recession risk has also reduced the probability of very low oil prices, although solid supply growth outside U.S. shale may still push prices significantly lower.
Moving on to the top news in the energy sector.
The U.S. Treasury Department on Tuesday imposed sanctions on more than 20 companies in a network that it said has long sent Iranian oil to China, days after negotiators from Iran and the United States concluded a fourth round of nuclear talks. The network facilitated the shipment of oil worth billions of dollars to China on behalf of Iran's Armed Forces General Staff and its front company, SEPA Energy, Treasury said. Washington designated SEPA in 2023. The U.S. sanctioned companies including CCIC Singapore Private, which it said helped SEPA by concealing the oil's Iranian origins and carrying out pre-delivery inspections required before oil was transferred to China.
Marine fuel sales at Singapore, the world's largest bunker hub, dipped in April from the previous month but rose from the year-ago period, data showed on Wednesday. The volumes totaled 4.40 million metric tons, down 1.4% month-on-month but higher by 4.0% year-on-year. Latest data from Maritime and Port Authority of Singapore showed. Vessel calls for bunker were slightly slower in April at 3,504, while container throughput came off from multi-year highs, totaling 3.63 million 20-foot equivalent units. Next, we have the top news in metal markets. Indonesia will double cobalt production capacity versus last year's levels by 2027, a senior official said on Wednesday, adding the world's second-largest producer has no plans to control supply of the key electric battery component. Cobalt production capacity in Indonesia will reach 114,630 metric tons per year by 2027, up from 55,630 tons in 2024. Septian Hario Seto, Executive Secretary of Indonesia's National Economic Council, said at the Cobalt Congress 2025 in Singapore. Indonesia is the world's second-largest cobalt producer after the Democratic Republic of Congo, DRC, which produces about 70% of global supply. The DRC said earlier on Wednesday it was reviewing a 4-month ban on cobalt exports, which was imposed on February 22 to rein in oversupply and low prices.
Gold prices fell on Wednesday as easing U.S.-China trade tensions soothed fears of a potential global recession, boosting investors' appetite for risk and weighing on bullion's safe haven appeal. Spot gold fell 0.4% to $3,233.26 an ounce, as of 10:10 GMT. Prices scaled a record high of $3,500.05 last month amid elevated trade war fears. The US and China agreed to a 90-day suspension of reciprocal tariffs following discussions in Geneva over the weekend, with the US planning to reduce the de minimis tariff for low-value shipments from China to 30%, according to a White House executive order and industry experts.
We will now look at the top news in the agricultural sector.
US soybean exports may drop 20% and the prices paid to farmers will plunge if the United States and China fail to resolve their trade dispute limiting US soybeans from their largest market, agribusiness consultants Agri said on Wednesday. The temporary truce in the US-China trade war, announced on Monday, would not help US farmers revive soy sales in China as Chinese duties, even reduced to 10% from 145%, remain too high to make US soybeans competitive, AgResource President Dan Bass told Reuters. US soybean exports could slump to 1.5 billion bushels from an initial estimate of 1.865 billion without a substantive deal, Bass said on the sidelines of the GrainCom conference in Geneva.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.